Hi there, and welcome to another edition of Resources Plugged In. I'm your host, Keir Reynolds, and today we're lucky enough to have Simon Dyakowski, who's a young up-and-coming executive in the mining space, got a couple of companies that president and CEO of. Hey, Simon, how you doing?
Hey, good morning, Keir. Doing well. Great to have a chance to chat with you today. Thanks for having me on.
Hey, you're very welcome. Today we're going to talk a little bit about something that you've been pretty strong at recently, which is financing in a challenging venture environment. Despite having metal prices performing quite well, commodities at almost sort of record highs, the explorers and developers and even some of the producers are trading way below their all-time highs. And certainly if you talk to some of the stockbrokers that we know, their commissions running a little dry, not doing as many financings. But maybe you could kind of touch on a little bit of some of the success that you've had. You've got two companies that you're involved with, and you've just closed two financings. Maybe you could just tell us a bit about the name of the company and how much you raised for each.
No, happy to. So we have been quite fortunate in being able to source capital for our projects in both of the companies over the last year, which, as you point out, has been probably one of the worst periods for raising equity capital in the mining industry over the last 30 years. I've been speaking to some old timers that are kind of hearkening back to the early 80s and the days of 15, 18% interest rates as a comparable to a lack of available capital in the mining industry. So it's been tough. But I think we have great assets across the two companies, and we have been able to tap really a select pool of investors that agree with us on the game plan for each. So I'll start with Aztec Minerals. So this is a company that I got involved in 2020, and it was seeded by a very famous entrepreneur geologist out of Vancouver, Bradford Cook, IP, founder of Endeavour Silver and a number of other companies. So he selected two fantastic exploration projects. And through our efforts in 2020, 21, and 22, we made discoveries at each of the projects. And as a function of that, I've been able to keep exploring and expanding them. So we have in that company Tombstone Silver District in southeast Arizona, and then the Cervantes Porphyry Gold Copper Project in eastern Sonora, Mexico. So we were able to get a strategic investment from Alamos Gold last year and have been able to keep it going funding wise. That one we've raised since January $2.5 million, and that's on top of about $3.5 million that we raised in 2022. So we've been in good shape there. And then the other company I'm involved in is called GSP Resource Corp, and this is focused on a small, or what used to be thought of as a small underground resource in the Highland Valley. This is a past-producing copper mine of high grades of copper with a polymetallic element of silver and gold. And the really unique thing about this asset is that it sits within about 2 kilometers of the wall of the Highland Valley open pit mine, which is famous in British Columbia and in Canada as being the largest open pit copper mine in the country and one of Teck Resources' flagship assets. So just given the proximity there and some of the grade that we've been drilling has kept investors helping us advance it. And that's been a good story for me over the last year. We sort of reset it last year. We hired a new group of geologists, Apex Geoscience, which are based out of Edmonton, but have an office in Vancouver. A really strong team there. And they've helped us analyze a lot of the historic data that we've picked up and come up with a drill program that investors took to. So we recently raised a little bit of money to go and drill up there. And I'm actually heading up there after this call to go and check in on the drilling.
Hey, excellent. Well, we'll get into each of those a little bit more, but maybe we could go back just a little bit and set the stage for a little bit about who you are. How'd you sort of like get started in the industry?
So I'm following my dad's footsteps a little bit here. My father's a geologist, exploration geologist, and he's had a long career of raising money, listing companies, finding assets, basically more of an entrepreneurial geologist in the context of Howe Street, really. So I've been working in the industry for over 15 years now. Started off in the brokerage houses in Vancouver. Then when the bear market of 2013 hit, took, I guess you call them real jobs at banks and finished up some education during that period when there was, similarly to now, very much a lack of interest in junior exploration, and then got back involved about 6 years ago, working with a group of junior companies and eventually listing my own IPO and then getting involved in Aztec. So That's the very long and short of how I've gotten into it.
Excellent. So a couple of the smaller brokerage firms that you worked with were Solomon Partners and Lead. Obviously, Solomon with Terry Solomon, very famous. And prior to that, Sam McGee, who was with him. They obviously tag teamed on several very successful transactions over the years. So what was it like working in both of those firms? Did it build you a good foundation on top of what your father's already taught you?
No, it absolutely did. And to be clear, I never actually set out to work for my dad or do anything like that. It just happened. And I think that's probably a common story for a lot of people.
Father was in banking and finance, and sort of what happened, I followed in his footsteps. A little different, just like your path's a little different, but it's in the blood, they say. So I guess we sort of eventually sort of go that way. But what was the transition like going from a real job, as you sort of call it, into working with some larger banks? You worked with Royal Bank of Canada and Bank of Tokyo, Mitsubishi, if I'm not mistaken. Quite different than the entrepreneurial side of things that you're doing now. How are you finding it today?
Yeah, well, so let me just jump back to Solomon and Lead and just to show maybe that transition. But that was an excellent opportunity for me being 22 years old to really learn the ins and outs of the junior industry. Solomon, as you pointed out, with some famous entrepreneurs that ran that shop. They were very, very active when I joined them in 2008, my first job out of university. And I started on June 21st, 2008. So it was, months shy of the big...
Tough timing.
Yeah. Well, I mean, it's funny because I think, if I have this right, at the time, the day that I joined, the TSX hit its all-time high in 2008. And then
Wow.
4 months later, it was Lehman Brothers, zero trading volume on the desk, except for Ventana, thanks to Sam. And then that kind of kicked off the next wave of speculation and made on the junior mining sector from, to 11, which was, when we met. And that was obviously a very, very positive for people involved in our industry. So I kind of cut my teeth just really watching that. I wasn't directly involved. And then that got me thinking, well, great. But I'm more of a talker really than a spreadsheet guy. So got in touch with the guys at Lead and worked there with, people that we both know and for 3 years. And then learned the other side of the market, which was, dry up and slow down. They would go to zero. And hard learning experience for me there about really the viciousness of the market when the tide goes out after that period of euphoria from 9 to 11. So kind of circle there twice already. And then working at the banks was actually pretty interesting. Like it, as entrepreneurial as one would like, but my role there was more around the credit market. So I spent a lot of time on the Bloomberg machine, about credit and interest rates and the flow of money, which is, when you're talking about large corporations that are borrowing and have, structures that are fine-tuned towards gearing and basis point move has an impact on them. It was actually very useful for me to learn all that and to sort of form, nobody can tell the future, but just to form a bit of knowledge on the bigger picture and how capital flows around between the credit and equity markets and now how credit impact everything, rates. Not even flowing down to, as you pointed out earlier, to the senior producers, because, why take the risk of a corporation when the government will pay you 5.5% right now?
Yeah, pretty wild, isn't it? Wild to think, going from like 1% interest rates, what you'd get getting paid that. Pretty wild in such a short period of time. So certainly going to have a bit of an impact, and it's definitely. Just from my, point, I'd love your sort of view on it, but we've got to see the U.S. large cap stocks like really perform broadly before you see a lot of money sort of flow into kind of the junior kind of, people are looking at more risk. They're already making good returns and good income on some larger stuff performing well, and then look elsewhere. Obviously, been a bit of a concentration of performance in the U.S. Large caps, them are very well. Only a few, and hence we're seeing a little bit of a similar thing happen in our market where I guess the cream is rising to the top and there's definitely the have and the have-nots. Luckily, you've been in the have camp, obviously being very resourceful and obviously aligning yourself with some, excellent, management dollars, including yourself and your background. So that's great. But what are your thoughts on that theme? Do you think is that accurate? Are we seeing sort of a concentration?
Well, yeah, I mean, definitely in the last couple of, I mean, you're seeing a handful get all the attention, which I think that's a good thing. I mean, it probably needs to say you need to have some big winners at the beginning of a nascent bull market. So, yeah, I'm really pleased. I'm a lot more concerned if some of these, some of these ones we were chatting about weren't getting the attention with the results that they're pulling. That would be very negative to me. And then just in terms of the junior markets and they find themselves in, I mean, it's a bit tricky one. There's so many factors you could point to, and I agree with you that the large caps underperforming and breadth being weak obviously has an impact on the risk capital flowing downward. But I think specifically to the mining industry right now, we've just had so many fake out rallies over the last 3 years that, investors are kind of, fool me the seventh. And there's just no confidence for anybody to come back in because they've been burned. I mean, gold has come up several times now, hasn't been able to break. And, it's been 3 years now over 3 years since we had that big run in 2020 when everybody did well. So it's getting really long in the tooth. And I really don't blame people for being a little bit skeptical on the market. And just as you were asking about my career experience, what I'm thinking about right now is how I wasn't in the market in 2016, which is too bad because that was really a turnaround that came out of nowhere. I think a lot of people say, right, the macro factors really weren't indicating to that rip in gold, and a lot of people did well in 16. And I think a function of that was people just being tired of the market from 12 to 15, and there wasn't anyone left. And then you had that funnel effect, right, when things perked up. So I'm very hopeful that we're, again, I don't want to make predictions because nobody can predict the future, but I would, if I had to bet, I'd say within the next 12 months, let's say 12 to 18 months, you should see something similar to that. And then another supporting argument for that theory is 2006 to 2008 was the last time that the Fed hiked really significantly and hit the brakes for a long period of time. So if you look at the FOMC chart from if you pull it out from maybe 04 to 09, very interesting how they stopped hiking in 06, really well before the crises emerged in the banking sector and before the real mortgage rot was exposed. And during that period of time, gold and commodities performed exceptionally well. So, I think a lot of waiting for rates to come down, but I don't know if that's 100% correct because rates only seem to come down drastically in a period of crisis when everything kind of converges to a one correlation. It's never these announcements where they're cutting 50, 75 basis points. I mean, it's usually because this is crashing because something, horrendous is happening. So I don't think we want to see that, I think we want to see happening, which is this flatlining, and the flatlining of the Fed funds rate or the bank or whatever should be an indication to the market that the US dollar is topped out. And, what's really good right now, if you think about it, gold is completely diverged from the dollar over the past 3 weeks. So looking historically, when we've had these fake outs, right, over the past couple of years, think about the last, maybe in March of this year when Credit Suisse went down, right? You saw gold spike up to 2000 and almost to 2100. But that was in tandem with the bonds being bid, right? And so there was a lot of fear in the banking sector, and gold went up as you'd think it would. But this last rally in gold has happened in the absence of any move in the bond yields in a favorable direction. I think that potentially gives the gold market fuel on the next leg. So, if you're following when the bonds do get bid again, we're already starting at 2000. We're not starting at 1800. And so if we can push through to a new high and hold it, that could be what spec investors into the gold space. And then once they realize that, hey, maybe there's not as much yield to be had in the credit markets as there was, a few months ago to go down the risk curve. And it could create a funnel effect like in 16 where, nobody was in the market, just turned on a dime.
Great. Thank you for that. Thanks for that wisdom there. Like what you're saying. What do you think about, I guess Bitcoin? People are sort of saying, well, hey, this wasn't sort of around before. That's maybe taking some of the flow of money that might go to precious metals, might go to gold. I don't know about you, but with all these exchanges and shut down, I'm not really even, as confident to be able to buy that anymore. Again, talk about something that's a bit concentrated. But boy, has it, often and then, in a percentage, but definitely sort of outperformed. Any thoughts on that?
Yeah, I think error out of the gold is it's a story that is old, right? I mean, that certainly did happen in 21 when Bitcoin was really ripping, and you can talk to institutional analysts, fund managers, and they will tell you that, a lot of them weren't participating in gold because they were fully in crypto. And I've got nothing against for Bitcoin. I'm really happy if it got in early and has done well. And it's a really interesting nascent medium of exchange and class. And again, I haven't really researched into the long-term prospects of it, but there's no denying that it's some element of correlation with currency debasement. And so I think to relay it I don't really think that that's going to happen again, because it had the big run, took the spec money with it, right? But the gold market remains, I think it's like $8 trillion versus $1 trillion or something for cryptocurrency. And gold has no real substitutes, save for maybe like silver, palladium. I mean, periodic table doesn't, but the universe of crypto can expand every single day. I mean, there's no limitation on any, number permutations you can have these securities. So, and it's not to say that Bitcoins go to zero. It's obviously not. It's got a huge liquid and people like to play it, and that's good. But I think net will have the gold market turns. You're actually going to have a bigger pool of potential investors for gold, just because Gen Z, millennials, Gen X, everybody that's watched Bitcoin is interested in, ultimately gets into the theory behind it, which is currency debasement. And talking about currency Main Street 5 or 10 years ago, right? Nobody. But now everybody's aware of it. Everybody's worried about it. And yeah, some of them might elect to with Bitcoin or hedge, but I think invariably people are going to get into gold too and understand that, hey, gold only really, the gold increases like 1.5% every year. It's pretty stable. You just can't print gold. I know you can't print Bitcoin, but you can make new cryptos. So yeah, yes. I mean, that's kind of my take on that.
Hey, thank you. That's very interesting, for sure, to hear from your vantage point as president and CEO of some mining exploration companies. Maybe we could turn our attention to those a little bit. So you sort of making discoveries, I guess, at both of your projects with Aztec. Maybe you want to walk us through Aztec a little bit, give us a bit of an overview on the company, how many shares are outstanding, and like what sort of work programs you have going on.
Yeah, so Aztec's 100 million out and almost on the nose. And we have 2 advanced stage exploration assets in it. So we own 75% of the Tombstone Silver District in southeastern Arizona. This project is on private land, and it's a past producing open pit heap leach mine. And it's also a past producing underground high grade silver mine. On that project, we've spent about $2.5 million on 3 rounds of drilling, geophysics, etc., to put in a 50, I think we're at 50 plus drill holes now. And we're basically at this point expanding on the open pit that was operating in the 80s at depth and in the pit walls, and hitting amazing grades. We're hitting up to 65.5 meters of grams gold equivalent, all in oxide. So this is a growing resource. Wow. I mean, it's not at a resource yet, but it's one that, on the whole, we've hit like super highlight holes. It stacks up pretty well with all the other explorers down in the Southwest US. It's on private ground. We love it. It's such an exciting project. It's got this Western lore. It holds a lot of appeal to US investors, particularly. It's a vacation sort of for families down in the go and see the frontier land. So Tombstone is one. And then the one that we're currently about to start drilling is Cervantes in the mountains of eastern Sonora. And what Cervantes is, it's a big property with gold, copper, porphyry mineralization all over it. And what we've done there is just honed in on one ridge top that's about 1 kilometer long and drilled that off now to a width of about 300 meters. And we're hitting gold oxide numbers up to 135 meters over 1.5 grams over 135 meters, 165 meters of a gram. So for those that are familiar with open pit heap leaching, this is exactly what you want to see. What the really neat thing about Cervantes is that we're surrounded by open pit heap leach mines owned and operated by Canadian companies, including, and most notably, Alamos Gold's Mulatos district, which in their financial statements 2 days ago is their top producing mine and has been for the past, I think, 17 or 18 years since they went public. And they're like a $7 billion company built on that. So, really quickly on Cervantes, it's got this, we've discovered already is what looks to be potentially leachable gold in a cap of potentially a much larger system. And for those that aren't, as technical maybe as for the company, what's key to the company in the place is those two words, heap leach, right? And what that means is that in certain parts of the world, Mexico, Arizona, Nevada, New Mexico, perhaps, you can sitting in an oxidized setting near surface for a very low upfront cost and a very low potentially operating cost, which means that, even deposits that might look smaller, on a apples to oranges basis, bigger underground deposits can actually be more financeable and more profitable. It can add, at the end of the day, lower risk production to larger companies. So we got a strategic investment from Alamos for 10% of our shares last year because our project at this point has all those hallmarks. So it's one that we are continuing to drill, and we're expanding it right now. And that should be exciting news flow for us over the next 3 months.
Hey, excellent. Thank you for that. Is there, Cervantes, does that sit on like one of those kind of trends, like there's sort of Twitter in Sonora?
It's in the larger Laramide porphyry belt. So I don't know if that helps, but that's all the way down from Arizona down through Sonora.
Right.
So if you look on all compass directions, you've got Osisco to the west, you have Minera Alamos to the south, and then you have Agnico Eagle and Mulatos. So Agnico Eagle's like Mulatos, which is Alamos mine to the east. So yeah, porphyry gold type setting, and we actually have like 11 targets on the property. We've only had the opportunity to drill test a couple of them, so we think this could be big.
Hey, that sounds, I know from a few other companies I follow, Sonora can be a great jurisdiction, fairly low type area where you can find they're not going to cost you $1 billion to do so.
Exactly.
So you tend to get good leverage as a junior. So congrats on that. Now maybe you guys a bit of an overview on GSP Resource Corp.
Yeah.
That one actually, some phenomenal stocks on that sort of August and September. Over a couple period, I think you could have had a 400% plus return and saw some tremendous volume and whatnot. You could kind of walk us through that company, and that one's, I guess, a little bit more focused on copper. Is that the case?
Yes, GSP had a great run, and it's got this muscle memory in the stock. I mean, traders love it because it's only got 27 million, of which I own 10%, and my group owns about 50%. So there's just not a lot of stock out on it, and it has this pattern of when we start drilling, it's a run. Now it's come off now because there was a 4-month hold of a 12-cent financing, and you know how these things are in a bad market. You got good control over all this. Some people, whatever they need to pay their mortgage or pay for their I don't know, selling $5,000 worth of stock at 10 cents, but there's obviously some compelling reason. Credit card. Maybe your car or your boat. I don't know.
Yeah, it's usually the boats and the side. Anyways.
Yeah, exactly. It's that kind of market where you just keep it together. But anyway, so it's come off, but we just started to announce that yesterday. And this is high grade underground historic mining. So there was about 1,000 ton a day on the site in the 80s. Now, the copper price just fell off a cliff in 1981, and the group that owned it just sold off all the equipment to recoup their losses. So we're really the first group to come in and all of the historic drilling, which is over 60,000 meters, put it into a model. And what our geos have come up with is, just a very modest plan to complete the model, the drilling, and to work up some exploration targets for next year. And why investors really took to this reboot in September was because we're sitting right next to Highland Valley Copper. Now, we need to show a little bit of growth, get on their radar screen. I think we have an opportunity with Alwyn to show the Alwyn is the asset in GSP is to show that it's, it's a lot more than just a depleted underground. It's not depleted, right? They only took out 200,000 tons and really got dummied by, the early 80s recession. And B, we're in a very underground mining. They weren't really comprehensively drilling it to have a big model, either for block caving or for larger scale underground mines. So we've got a great opportunity to make sense of all of their work. Now, our market cap is about $3 million. And if you put a present day value on the drilling that's been done historically, that would cost you $20 million today. So we think there's a great arbitrage just in bridging that gap. And there's a whole bunch of hungry mills around us looking for feed. Even if you look down at in Merritt, there's the Nickel and Mining's mill. There's Afton up to the north, and then directly next to us, you can actually hear the trucks going when you're on the property is Island Valley Copper. So great place to be exploring. Even in BC, right, which is, it's
touristically
BC.
Can be challenging, but
yeah, it's hot and cold.
Yeah, if you've got ability to drill and you got that, that's half the battle right there. So congrats on that. And but anyways, it's still good. You can drive there in a couple of hours and have some boots on the ground. So good for you. To be able to be involved in that. I saw some photos, I think, recently of some field crews that you were sharing. Looks like an exciting property. In terms of like, what would success kind of look like? What sort of like widths are you like looking for? Would be kind of, if I can put you on the spot.
Yeah, I mean, we're looking for mineable widths of high grade copper and polymetallic credit. So, 3 to 5 meters would be, moving the needle of, multi% copper and some decent gold silver kicks. And I actually got a phone call from the old CFO, I guess, of the Alwyn Mining Company a few months ago. And he said, hey, don't forget about the silver there, because the silver credit for milling costs in the late 70s, early 80s. So that's what we're focused on right now, is high grade, completing the model, and then seeing, what drove this mineralization into these shear hosted veins. And, that has yet to be determined. And that adds upside on the project. And once we tap into this high grade, then it gets a lot pretty quickly.
So you were talking a little earlier about this. I guess you got a database of some past drilling that cost you over $20 million to drill in today's in economics and today's drilling costs. That sounds pretty impressive to your market cap. So you've been able to kind of, I guess, resample or put like sort of understand where you should be drilling. Do you get advantage of any of that historic stuff, or is that kind of challenging based upon 43101
Good question. No, it's really up to the geologist, right? So we have a third party, and it's their comfort level with the data, and they are comfortable with it. So that's in all our public disclosure. They have found paper data, right? So we have some of the core and core shacks, and we have these paper logs. And then what we have done is compared it with some of the grades of our drilling, which totals about 5,500 meters, and it lines up. So they can make some inferences off that at their, using their professional. So it's very valuable. To answer your question.
Yeah, there was another company in BC that sort of just did a similar thing. They worked with a group called to look at some historic sort of drilling, and they were to bring it forward and put a new mineral resource estimate out, a compliant, and it was pretty impressive. Big number, almost a billion pounds of copper for that company based upon drilling that somebody else had funded, and gave them a good model to go start with. Sounds like you've got some similar type opportunity. That's exciting. Copper's been one of those. It's not really great this year. I guess copper. There's some discussion about it sort of being a good barometer on the health of the economy, and like whether industry is sort of manufacturing and whatnot. What do you think in terms of being this predictor and things?
I mean, I think that's it is. But when we took this thing, it was like 20. So it's 360 or 350, wherever it's at now, is higher than where it was.
Yes.
I mean, obviously, like no one's it's not got that froth of 21 when it was, going to $5 or $6.
$5.
Yeah, $5. But I knew that back in 11, 12. I mean, it's cyclical. I don't really like massive now.
Sure.
I think you'd need to see big sell off be evident. So,
Right.
I try to shy away from promoting, GSP as a play because there are like real copper plays,
Sure.
guys who've
It's
gone out and,
it's like polymetallic, as you said, right?
well, but it is poly and it is primarily copper. So, I mean, it is copper mine and a copper play in that sense, but more of a special situation in that it's an established property and a past producing mine in the shadow, bigger mine that's advancing toward it versus there are many copper companies that are they have massive prospecting working up. So I think have more of a correlation or leverage to the sentiment towards copper versus ours is it's a special situation to put out a robust resource on a discovery that's already been made and grow it versus leveraging real enthusiasm to copper. But I am a believer over the long term. I mean, it over the long term it always goes up. I mean, it's super correlated with economic growth, right? Be it whatever. When I started in the industry, copper in 06, 07, it was, we were, now they're talking about how many pounds going to eat. During the boom in the US, it was always, hey, there's 4,000 pounds of copper in every new house. So it's just like a baseline industrial input for whatever you're doing. It conducts electricity. So I
Right.
like copper over there, but yeah, it's obviously not in favor right now.
There's obviously some pretty good fundamentals talking about kind of the electrification of the economy, and obviously how important copper is, I guess, getting us off of fossil fuels and get us more onto the electrification battery type technology and stuff like that. Friedland, obviously Robert Friedland, very famous, executive in the mining space, promoter. He's got some articles and saying things in terms of copper. I know that a few months back there was a big panic about that the London Metal Exchange or something was going to run out of copper and wouldn't be able to make deliveries. And obviously, it's sitting in sort of I guess a 12-month plus sort of like, so obviously the only metal exchange where you get a source of copper. But any comments in terms of its sort of forward demand related to sort of the decarbonization of the economy?
Well, there's that it's a helpful narrative, right? I mean, it's, you always want to find new sources of demand for a bit of, I think, dispute over this impending supply. I mean, I believe in 2024, it's projected to go as surplus and then a supply gap develops. So I personally, I'm not funding like a big billion-dollar company. I wish I was. I have a lot of admiration for Friedland and real big-time players in the copper. So I'd say my on the copper market, wouldn't be that helpful. I mean, I read this that you do. It's a dispute, the facts that you pointed out. I think over the long run, it's a resource that's used in everything from electrification to home construction. So there's demand against a depleting resource, and enthusiasm for exploring for it, I think, is probably just more correlated with enthusiasm for speculation on mining in general,
Right.
than copper specifically. That's a bit
So
of
so in terms of the pitch for GSP, sounds like it's it's closology to sort of Highland Valley, which indicated they're sort of continuing to mine and coming to your ground. So really, I guess a play would be to really prove up what we've got and see if it might be interesting in a known operating copper district.
Well, yeah, that is one aspect of it. And say the other of it is it's just not an asset that the market understands because nobody has compiled the 60,000 meters of drilling in a comprehensive model. They just haven't, because
Wow.
when it was developed as an underground mine, it was a private company. They didn't have public reporting obligations. So I mean, literally nobody's done it. We were the first group to go in my office. I have boxes and boxes, banker boxes full of these drill logs that are on fading yellow, and nobody had bothered to scan them, figure out, what the number are, and see where they're oriented in 3D space. I think our average weighted, for all the samples that we could identify, we came up with meters at an average weighted grade of 1.8% copper. So the pitch Aztec GSP is, we have a much, we think, bigger resource than the market thinks we do, and we are working to prove that out through drilling and modeling.
Excellent.
If copper helps us as a tailwind, that would be lovely.
Excellent. Thank you for that. But why don't we sort of switch gears a little bit? Thanks for giving a good overview on those. So maybe you could, maybe we'll just sort of touch on and what's going on in mining and exploration a little bit. I guess you have to be pretty careful in terms of some of your planning, always understanding sort of, I guess, your burn rate and what you're spending in order to sort of get to your next, next place that you have to finance. What are some of the sort of go through your head, being in the big seat for both? What are some of the, could you give us a little bit of a inside look into how you sort of assess how you're going to sort of and when it's definitely bar market?
Yeah, so chiefly we have to control our burn as best we can. Just things that you have to always pay for to stay. So always looking for ways to make that cheaper, right? I mean, there's exchange fees, all of the back office, all the stuff. I mean, you stay listed if you don't do it. So very cat. And then you have to keep exploring. I mean, otherwise, why would anybody own your stock if you're not advancing these? Nobody knows when it's going to turn. It can turn on a dime, right? As well, we know that it does always turn when you don't expect it to. So if you're not exploring through that turn, you're just going to be refinancing on the back of somebody's, at a lower level and getting going and just eating up the time. So my philosophy is we have to do at least something that adds value, either in the case of, Aztec, we're doing some step out to show, just that it is growing and we can grow a lot more. We're not obviously being as aggressive as we'd like to be. I mean, the project probably deserves, a program of 3 or what we're doing right now. The money is not there for it. We have to be prudent in managing our structure at an 18 million market cap. And the same thing with GSP, right? I mean, we are we're serious about advancing the asset. This is flavor of the month. Let's call up to see, hey, do you have a vendor? What do you have in cobalt space? And
Sure.
And again, I got nothing against that. That's not my model.
Sure.
So yeah, just we got to be very careful because the money's really not there. We're lucky to get some, and we have to add value with what we and almost tied ourselves over to when the money flows back and just in a better position to be, one of the leaders when the funnel effect hits the junior exploration. There's some graphics floating around Twitter these days. I don't know if you've seen them, but it's a comparison of like financing volumes and trading volumes year to date for this year to 2022. And it's just like, I mean, what can you say? It's dead.
Yeah, I would say that it's maybe healthy. It flushes out some of those ambulance chasers who are not really like in it to really move a real company forward. They might play for the month. Sort of ambulance chasers. I know there's a lot of people talking lithium, and maybe we'll see a flow of a bunch of graphite companies and projects get added here with some of the news that we've heard. So there's always going to be a bit of that, but the funnel effect, as you sort of mentioned, when I guess real companies with real business plans, and then they tend to be sort of the first to sort of benefit. So it sounds like you've got 2 companies there that you've done forward. What are some of the what are your thoughts on controlling shared dilution? That's there's also some charts out there. I just was reading a piece from this morning, and they were talking about the divergence of the price of gold with sort of the juniors. And it's like, well, juniors are spending cash and less of it. So they're inherently a bit more risky than, physical bullion, or even large sort of producers that are, but what are some of your thoughts in terms of like share dilution? And, I guess when you're looking at harder markets, like sweeteners and warrants and full warrants and stuff like that, what are some of the thoughts that sort of go that have to go into some of the decisions that you make?
Yeah, so I mean, share dilution it's a horrendous thing to deal with. I mean, I don't know if I don't know if you know this, but I basically own my own deals. So every time I dilute, I'm diluting myself. I own 10% of GSP and maybe like 2.5% of Aztec came into after it was seeded. So you have to dilute to raise money on companies that do revenue. And you can either dilute the project or the corporate level. So I guess speaking, my thoughts on dilution are, what were the reasons for it, and how was it done? And then to analyze, did that make sense? In the case of Aztec, 100 million shares out. So, if I just came up to you on the street and said, hey, dude, like my stock, I want to pitch you on it. You'd say, oh, there's no, automatically people say, oh, that's heavy, right? And but then you got to see, well, how did we issue the stock at what prices and to who and for what reason? So, why does Aztec have 100 million now? We have 2 advanced projects. So we've raised 25 and 30 cents. which is not bad given where we're trading at right now at 17 and a half. Issued 10 million to buy a minority interest in the property. We just had to do, right? I mean, there was a overhang on the market. Markets hate joint ventures, so we had to buy out. That's 10 million. We issued 10 million to Alamos Gold. So who's going to argue with that, right? I mean, you've got a cornerstone investor coming in. And then in terms of, terms and warrants, half full years. Again, I did a financing with no year. I did one with a half warrant for someone with full warrants. And really, that is just, to me, it's just an individual call that we have to make. Who's your lead order? Are they good shareholders? Are they not? Are they flipping your stock for the? Are they are they to the long-term vision? So for us, a lot of our shareholders are in Aztec, for example. They're experienced in gold mining, so they want to have percentage ownership because they see the potential for M&A takeout down the road. So I'm happy to sweetener, right? Because I don't believe that most of them are flipping the stock. It's going to hurt our existing shareholders. So yeah, I mean, you got to limit the dilution. You've got to be careful with the warrants, doing desperation financings, share issuances. I mean, I try to shy away from that. Lucky in GSP, I'm able to keep it down. It's only got 27 million out after being public. I do a lot of the work myself. I spend my weekends doing wire payments and, doing all things that some companies probably pay corporate secretary. Nothing wrong with that. I have the time and inclination to do it, but it's pretty tedious. And but on the flip side, I've at least kept my position in the company after 3 years of being in a pretty bad market.
Excellent. Thanks, Simon. I appreciate that. Really good to get a good internal sort of view on what it's like. You touched on it earlier. We were just getting going that you took a little bit of a break. The market took a real job, as you called it, and got some education. Part of that might have been getting your CFA. Is that correct?
Yeah, CFA, and I did my MBA at the same time. So
there you go. There you go. Excellent. So how valuable are those in what you're sort of doing on a day-to-day basis? Obviously, just from chatting with you, some of your some of the more technical economic driven stuff you're very well versed in. Some of that education, what you're
I'd say it's quite relevant in a direct way, but the CFA just kind of forces you into how the markets function at a micro and a macro level, and then really your own experience in your career will fill in the rest of the blanks. So that was good. I mean, that was kept me going when I was at lead, and it was bad. I'd dive books after the close and get that done. And then, the MBA for me, I mean, for others, it's a different experience, but it helped me kind of run the aspects of not the market stuff, but just that you do and dealing with various partners. So it helped. And then, I've just been lucky to get involved with good people over the few years. And it's all their own story, I guess. But for me, I did a lot of education and I'm a big of it. I mean, I know some people don't, and I'm envious of them if you can get going without it. But for me, it helped. So, to each his own, I guess.
Yeah, great. Well, I think from the first time I met you, we played some horrible golf a while back. I don't think we've since gone out again, but it's been nice to see grow a career and gain some good success. Well, maybe some of the others that were sort of at the time have not necessarily had that same sort of success. So maybe a little bit is just how you help yourself in that education. What's a typical day sort of look like for you? You're running two companies, two very sort of different locations of projects, different management teams, different shareholder bases. What's a typical day look like? Day of life of Simon?
Yeah, it's a busy day. It's I'm up early and I'm working until evening. I just have things to get done every week and fit it all in. Traveling for marketing and obviously spending some time with my family. But I'll just answer this right now. People say, "Oh, two companies. How do you split your time?" And 3 mines, right? 3 projects between 2 companies. Some companies have 10 projects, so it's for me project based, right? And then the administration of the 2 structures it has to be dealt with, but not on a day-to-day basis. Maybe every month you review how everything's going and what the spend is and make sure that everybody's working together. But it's not an insurmountable task, and it doesn't I don't think really impact the company in any great degree.
And would you recommend sort of your career path that you've taken to others?
I mean, it really depends on the personality. I mean, I personally really enjoy it, and I think if you don't really want to work for, you can't, then dive right in and figure it out. But if you're not like that, then maybe you'll make money doing something else. It's fun. It's even though it's pretty tough right now. It's once you see a few cycles, you just keeping notes is a good idea. I think keeping like a journal. July 20th, 2020, gold's at $2,100. I'm up X 100% on this, that, money's flowing. Just keep some of times, and then when you're despondent in the bear market, you can look back and remind yourself of the cycle. And so anyways, I would recommend a lot of good fun. And especially if you're in Vancouver, Western Canada, like it's one of the only games in town here that's kind of entrepreneurial. It's our industry. We should embrace that. It's Howe Street.
Yeah, I guess there's sort of two paths. You get into mining or real estate. And sometimes people surrounding both. When maybe they shouldn't, but yeah, there's definitely a little bit. Very good advice there on the. I know that for myself, I sort of think, oh, that's it, it's over, it's never coming back. That's the to be buying. You do the opposite of what your mind sort of thinks. You got to sort of switch it around to sort of thinking if you're buying like, I don't know, a TV or something or a car and like price is 50% off, you're probably pretty excited about it. You kind of have to have some of those sort of psychology so I think that your recommendation on it's a great idea and nice to sort of relive all times are sort of bad and that things get better. Hey man, time for giving us a little bit than our share here. Don't want to take you away from your day too much, but appreciate having you on, Simon. Just to wrap up, is there anything else you kind of wanted to leave us with? Any last comments or points that you wanted to make?
Well, yeah, no, I just want to thank you for the opportunity. I think what you're doing here is great, and I watched some of your other content, and everything on. I think our industry should turn over the next 12 months, 18 months. Great one. It's a great way to money and be entrepreneurial, and teaches you a lot of lessons that maybe other more steady industries don't tell you. So it's great to catch up with you, and I enjoyed the content.
Thank you. Really appreciate it. Nice to see you doing. Congrats on the success, and we'll be rooting for you. And also looks like an opportune time to have a good look being active companies. So excellent.